I'm Gwen Preston of Resource Maven. I'm here at the Metals Investor Forum in Toronto in a sunny day in early March, just before the PDAC conference consumes us for a while. I'm joined by John Budreski of Morien Resources. Bit of a different story, quite a different story relative to the other companies that we have at the event here. I think the way to set the stage for that is to let's talk about the business model. Okay. Which is a business model that is yours. You, Budreski and royalty actually go hand in hand. So
not by my lineage or heritage.
You've created this connection.
Yes, I'm a big fan of the royalty model. I'm involved with 5 companies that have royalties as their principal assets.
Right.
What I like about the royalty business is somebody puts the capital in, and you get to reap the rewards of all the good efforts that they do. Importantly, with resource royalties in particular, is you tend to get involved with a resource royalty and have an expected life for it, but the owner of the project will often pour in capital later on in life and extend the life. So you think you're buying a 10-year annuity, you end up with a 15-year annuity, or a 20-year annuity, you end up with a 30-year annuity. And then good old science and technology comes along and often helps increase throughput or increase the value of the product or something like that. So you benefit in all of the upside that the operator is going to do naturally. Organically, operators want to make things more efficient and get their profits up, so you benefit in that without ever having to put capital in. So that's why I'm a fan. And
it's clearly the opposite of what everybody else in the resource sector does, where companies raise money and spend it to create the assets on which you could potentially have a royalty.
A very wise person said to me one time, what is the net present value of a perpetually reinvested stream of annual cash flows? And I took that to heart.
Yes, yeah, absolutely. That's a good capture. Okay, so that's the fundamentals of the royalty model. Morien had stakes in some projects. There was a coal project, there was an aggregate project. You had stakes in those projects, and because of this perspective of yours, you turned those into royalties.
That's exactly what we did, fully by design. We had 25% of the Donkin project, and the capital for that project would have been somewhere, our share, would have been somewhere between $50 and $100 million on the full life of the project.
Right.
And then we had 100% of the Black Point aggregate project, and that's about $100 million capital spend. And so I have a long history in financing companies, and I know that if you have a $15 or $20 million public capital base, your market capitalization, it's really hard to raise $100 million off of that.
Yeah.
So in part, we went there because I like royalties, but in the other part, we went there because we're driven to design it that way. So we, on the Black Point property, we had a large operator come in, they pay us a royalty, they'll pay all the capital. That was an easy thing for both them and us to do. It was a very short negotiation. On the Donkin part, we introduced Chris Klein into the project. It took them a couple of years to put it as a priority, but they came in and bought out Xstrata and us, and we exchanged that for 3 milestone payments and the royalty on the coal mine. So the 3 milestone payments, which total $4.5 million, have all been paid and collected. That's why we have a company with $3.5 million in the bank. And then the royalties just started last year. They just finished their first anniversary, and they're building up the mine production.
So now this is a metallurgical coal mine in Nova Scotia, run by Chris Klein, who's a private operator, very experienced coal mine operator, ramping up to 2.75 million tons per annum over the next few years. You guys have 2% NSR on the first 2 million, 4% on annual production that's above that, 2 million tons. Talk to me a little bit about, just within the mine plan that Chris Klein has committed to, which is this 2.5 million tons per year. Talk about what that should mean for for royalty cash flow to Morien, and based on the fact that Morien has committed to dividending out the lion's share of that after-tax royalty, what that means for dividend shareholders.
Well, one of the things about being in the royalty business is you don't have capital obligations, so cash that comes into the company has to find a home. And I don't have aspirations to go and build this into another multi-billion-dollar royalty streaming company. We're not equipped for that.
Right.
So the smartest thing to do is to give the cash back to the shareholders. So you do that by buying back stock. We bought back 12% since we started the normal course issuer bid, or paying a dividend, and we commenced a dividend last December. To go back to the front end of your question, at 2.75 million tons a year, which is the permitted amount, that's sales tons per year, and it all, like all things in commodities, depends upon what price you pick.
Sure.
But we sort of look at our royalty as being full production, somewhere between $5 and $10 million a year. And so we'll have to pay tax on that, and there'll be a little bit of G&A in that, but if we collected, let's say $9 million, we'd have the ability to pay out somewhere around $6 million or so in dividends. We have 55 million shares outstanding, so it kind of gets you to having, at the high end, a royalty of around 9-10 cents a share.
Right, for a stock that's currently trading at 60 cents a share.
That's correct.
Yeah, that's easy math to see that that's pretty good.
Yep.
And that's assuming that metallurgical coal prices stay about where they are,
Yep.
and that Klein does not increase production significantly
Right.
beyond the current plan.
And so he has historically been a big mine person, a longwall miner, and what we have here is, notwithstanding 2.75 million tons sounds like a lot, the resource has the opportunity to produce much more.
Right.
And so he could go in and change the mining method from room and pillar to a longwall, at which point the production would probably get to around 5 or 6 million tons a year, in which case our royalty goes up commensurately. In fact, it goes up disproportionately because
Yes.
it's 4% on anything above 2 million tons a year.
Absolutely.
So if we were in the environment of getting, let's say, $8 million a year, there's that sort of pricing environment at the time. If you went to 6 million tons longwall, it would be like $20 million a year.
Right.
That would come. So we're very much torqued towards increases in production, more so than average.
So, I mean, like we started, this is a different company. This is a dividend-paying,
Yep.
very low-risk exposure to metallurgical coal.
Yep. We are a cash pay, cash play on seaborne metallurgical coal.
Right. Well, there you have it. Thanks for joining me.
Thank you. Always a pleasure.
Thanks for watching.
Thank you.